Hi everybody, welcome to another update on the stock screener. Today we have an update on Soma Gold. As you can see, the stock is moving up and will keep on moving higher. And the update that we have is the July presentation. So let's go over this new presentation because there is a lot of information here. So first of all, we already know they acquired more land package to 41,000. That's good. The main reason why people don't want to buy Soma is because they don't have that many resources yet. So buying some more land package will get rid of that problem. So now they have a lot of land package. Two fully permitted mills, Limon and El Bagre, that can be doubled in tons per day. So a lot of expansion possible. Now they have 4 underground mines. The Cortadera mine, the Limon mine, Nechi, and the new Aurora mine from the Otto Centro property. So we already know that. Very prolific region. Added land package. So this was acquired and with an extra mine. Current production is at 450 tons per day, and it's going to rise more to 700 by the end of this year. This is new. The El Limon mill will move. So this mill from here is going to move to here. Now that is something that I will talk about in this video because that's very important. Okay, production forecasts are a bit the same. So same guidance, 36,000, and the same as for next years. New goal is 100,000 ounces. So that's increased. So they are confident that they can increase production even more than the previous 80,000. So that's good news. That's the same. That's also new. More drilling is going to come. 40,000 to 50,000 drilling for next year because they want to add a lot of ounces, 100,000 per year. So that's good. They want to get to 1 million. And they only produce 50,000. So they are going to add ounces. That's what investors want to see. This is the production that they executed. It was a bit lower in June, but it was much higher in May, and probably this will keep on rising. So looking good. 8 grams per ton, very profitable with only a cutoff grade of 2. So that's 4 times the cutoff grade. Very profitable mine. So the El Limon mill will move to El Bagre, and then they will get to 47,000 ounces. Okay, and they will probably have around 20,000 ounces in the second half of this year. So great. Cordero mine, we know that this is 260,000, but they want to grow it to 500,000. I expect some news on that with drill results later on. This is the Nechi mine. They are probably going to bring this in production maybe in a year from now. More exploration, that's what we want to see. very good. That means that they have cash to do that. So this is what they are going to do. You can read it yourself. Aurora is very prolific, a lot of veins with high grade. So this is the most important slide. What are their goals? So more exploration. Resources are going to increase to 1 million if you add this up. And they want to go to 1.5 million eventually in the coming years. More ore is going to come from the small miners, so that's almost a double. So that means, yeah, they will increase the mine life like this. If they get more ore from the small miners, then they don't need to deplete their own resources. Very good. El Limon mill will go to El Bagre by the end of this year. Expand mill, yeah, that's for later. Then they can double the size of the operation, only for 6 million, so that's very cheap. Very low capex, improve the recovery. Yeah, we are currently at 88% and it's going above 90%. And I have a video on that. You can watch it. Grades improve by 5%, net income improved by 15%. So that's very accretive. Okay, dry stacking. So production, we already know that. This has been increased to 100,000. So yeah, that's very good. EBITDA, yeah, this company is trading at 1 times EBITDA now, and it will go to half times EBITDA. So very cheap. Net profits will go up. 50 million of net profits if they achieve this target. Then we will have 50 million in net profits. So that's 1 times PE ratio. I mean, put a 5 multiple on that and you have a 5 bagger. So 5 bagger in 4 years. Okay. They say 3 bagger. Okay. Because it's Colombia, I don't know, but I would give it a 5 bagger. Some ESG, some Colombia risk. Yeah, their debt will probably be paid back in 2 years. So, and then after that, they can pay dividends, although I like buybacks more because it's cheap right now. So I would buy the stock instead of dividends. But okay, that will be paid off in 2 years. And if gold goes up, it will be paid even faster. Here are some metrics. Basically immensely cheap. 1 times EBITDA. Cost is going to drop to 900 AISC by next year. That's a very high margin. So all the people saying that this is not a high margin company, this is a very high margin. With growth, if they grow it even more, then probably the cost will go down even more. A lot of resources to drill and ESG. 100,000, etc. And then we are at the end of the presentation. So basically conclusion, we're going to move the mill. That confirms the mine life, and I will talk about that. Land package increased. Resources will go from 500,000 to 1.5 million. That's a triple in a few years. AISC going down to 900, a very high margin. Exploration program is going to be increased to 50,000 meters per year, 4 million budget. Artisan miners will double, so that increases the mine life. Production will double, net profit will double. So everything will double, and then they will return capital after 2 years when they pay off the debts, probably around 15% dividends. You have heard about the retirement plan. SOMA, I think it will pay 30% dividend in a few years. After debt repayment, they could pay like 15%. And once they double that earnings, then you can get 30% dividend. So this is the perfect retirement plan. Improving recoveries, very good. That will increase net income by 15%. So now let's talk about moving that mill. This is an example. Okay, this is just an example. So this is the situation before moving the mill, right? Just goes up the cash flows to 200 million in NPV, 10% discount rate, and here you have the capex, the costs, AISCs. Now, what happens when we move the mill? When we move the mill, we have an upfront capex. I don't know how much, but let's say it goes from 6 million here to 11 million. I'm not sure about the numbers. Could also be just 6 million to 7 million. But you can see that there's a change here. The all-in costs will probably go down. I also don't know by how much, but let's say 100 AIC. So from 900 to 800. This is important because that means that these costs will be lower for every single year after the mill has been moved. So all of these costs will go down by 100. So what happens to the curve? The curve goes up. So now it's 225 million and it was 200 million, right? So in the beginning you have some capex that you pay, but at the end you will reach higher. And it looks a bit like this. SOMA before, and that's the blue line. So before the mill move, you would have higher earnings, but then in function of time, you will have lower earnings. When you move the mill, you have an upfront capex, so your cash flow will be lower. But because your costs are lower, then you have a higher end curve. Your end NPV will be higher. So that's very good. Why would you do that? Because Limon, okay, they have their own plant. If you would start up that plant, then you need a lot of labor. So labor costs are higher. You also need to mill, you need to transport the ore from Cordero to Limon. Transport costs cost money. Okay, you need to pay the truck driver, right? And fuel costs. So that means you have higher costs. So higher costs here in the before. Once you put the mill in El Bagre, then you will have lower costs every year. So that is the thing that is accretive here. And I think this is a good decision. This is called optimization. And here you can see previous curve, 200 million, and then 225 million as an example. What this also tells you, and that's even more important, that tells me that management believes that this company has a high mine life. Why? Because if the mine life was only to 2025, right? And that's what every investor fears, that the mine life is low, then it doesn't make sense to move the mill, because then you would just have this orange line, and then it will end up here at the same level, or even below the blue line. So it would go down, and then it would not even reach the blue line. So it would not make sense to move the mill if the mine life is only 2 years. Okay, so management actually believes this mine has 5 to 7 to 10 to 12 years life. And that's why they are moving the mill, because they are going to go from the blue line to the orange line, because they see that this is not only 2 years mine life, but 10 years mine life, right? 10 years mine life. Then it's accretive. So you can deduct a lot from this mill move. It tells me they can reduce costs, and it tells me they see a bright, long future for this mine, this Cordero mine. Right? Do you understand this? So actually this 3 to 5 years mine life that everyone is saying, they don't have resources. I think they have ample resources, because they are moving the mill from El Limon to El Bagre, which implies that there is at least 10 years of mine life in the future, because then this curve can actually go back into the positive after 2025. I don't know when, but it could be that it goes in the positive here, and then you can have even more cash flow in the future. Okay, so a lot of good things are happening. A lot of doubles, high dividends, more drill results coming, high margins, looks very good, and that's also visible in the share price. It's moving higher. So we are going to keep Soma Gold, add to the position until it reaches our target of $1 and maybe higher. But we will assess this when we come to the $1. And I'll see you in the next video. Bye.